Holy smokers, folks, this ain't no dang jokers. Get your wallets, get your pocketbooks, get your money ready. That's all I got to say. Get your dang money ready because Wall Street is starting to flip out here, folks, okay? All of a sudden, out of nowhere, they're freaking out over banks potentially collapsing. We're going to talk about that in just a moment here, about this whole systemic risk of the banking system in regards to regional banks, okay? They're worried about the VIX starting to spike, which, boy, did that VIX start to spike today. Holy smokers, that was no jokers. They're starting to worry about hot inflation numbers potentially coming, which would mean 2 months in a row. Job numbers. Oh my gosh, we have a lot to get through in today's video. I hope everybody enjoys this as always. We actually got some drama in the market. It has been boring. I'll be honest. The market's been kind of boring here for a bit, but oh boy, they're trying to spice things up now at this point in time. It's like a movie. You know, the stock market's like a movie, and it kind of goes through some kind of, you know, boring parts of it, just kind of little talking action. Then it's like boom, and it's like an action movie, baby. Okay. Speaking about action movie, you better get in that Patreon. That is the pinned comment down there. That is a no-brainer. You got to be part of that. I'm making my moves in there tomorrow. There's stocks I'm buying. It's going to be very interesting. You get to see exactly how I build up a portfolio and all the moves I'm making. You got to be part of that. That's pinned comment down there. Okay. So big tech right off the bat here. Obviously, just, you know, a lot of big stocks getting hit big time today. Look at Netflix down. Uber, oobly booba stock. Tesla, Myesla down big. Snowflake can't seem to get out of its own way right now. Down another 4% plus here today. I'm doing a lot of work on Snowflake right now and just trying to figure out like where that company's really going with its net incomes over this next few years, because the stock still, even though it's fallen so much, still looks dramatically overvalued. But I'm really trying to run numbers several years out to try to see if, like, you know, the valuation makes sense at all based upon where this company's going over the next few years. So I'm still doing work on that one. Intuit, big down, big here today. Nvidia, there's a lot of short sales on Nvidia. There's a lot of folks that are just, you know, been loading up on put options on Nvidia, hoping that baby falls. We'll see if they get their wish here. You know, stock was down today, but it wasn't down as much as you might think. I mean, 2.7% on a day like today, I would have thought a 4 or 5, maybe 6% move. Meta down here today, Adobe, everything big tech world just got hit here today, right? Russell gets hit big, S&P 500 gets hit big, Dow gets hit big, 500 plus points. NASDAQ got hit the least of the bunch. Very surprising, and it just kind of goes to show you that we're in a little bit of a different market this year than last year, because what happened last year? In 2022, what you would have seen in 2022 versus 2023 is you would have seen the NASDAQ get hit the hardest out of all of these indexes. That was the 2022 year, right? What was the NASDAQ down at the lows? It was down like 37%. Meanwhile, the S&P 500 was down 20-something percent. The Dow Jones Industrial Average at the lows was down maybe 20%. Russell was down a little over 30%, right, at the lows last year. So it's a very different market where some of these other big dogs, right, that, you know, last year weren't getting hit that hard, are now this year starting to get hit hard. Meanwhile, a lot of these NASDAQ stocks are holding up decent. Like, look at, like I said, Nvidia is a perfect example. 2.7% on a day like today. I'm telling you, if the market fell like it fell today, and this was last year, I'm telling you, Nvidia stock would have been down 6-7%. Like, the amount of times I would open up TradingView and see Nvidia down 5-6-7% last year was astronomically high, okay? Look at the heat map here today. It's Red Dead Redemption everywhere, okay? It's a bloody one out there. Everybody's getting slaughtered. I mean, this was a slaughterhouse here today. Red, red, red. I mean, you got a few little greens here and there, but it's not very much. It is Red Dead Redemption out there here today. Look at SDOW. SDOW is a pumping, baby. This is the past 1 month in regards to SDOW. This baby's up 18%. Okay. Now, I know some people didn't like that. That was one of my hedges I did this year, right? I did SH. I did puts on Home Depot, and I did call options on SDOW this year for my hedges, right? And I know a lot of people didn't like that, but at the end of the day, like, you know, I kind of think I might have properly hedged here, okay? Look at this, baby, 18.5%. Do you know what SDOW is going to go to if this market really starts to freak out and panic, like some of the stuff we're going to get into in this video? Oh my gosh, okay? That SDOW will move, you know, 50 to 100% in a snap of fingers if you really start to get any sort of short-term panic here with the VIX spiking up huge. Oh my gosh, okay? You know, when you look at a day like today, right, these options, this particular batch of options I have, right, which are expire in January of 2024 here, they're $23 calls on SDOW, right? You know, they moved a minimum of 17% today. That's a minimum number in regards to that, right? And there'll be a lot more people trying to play those as the time gets closer and closer, right? Really in the, you know, the summertime, fall time, you know, as it approaches closer to that January time, right? And so, when it comes to those, it's like, this could be worth $100,000 in a snap of fingers if the market was to get really, really rough. And that's why I hedged, certain ways I hedged, because I was just like, I'm just hedging in case the stuff hits the fan, as they say, and we got any sort of real panic in the market, because I know those calls will be worth stupid money in that sort of scenario, right? Now, commodities continue to go down. If you want some good news, I'll definitely give you some good news, other than you're getting good pricing out there and might get better pricing on stocks over the next few weeks here, is commodities, right? Natural gas down another 3.5% here today. Wheat down 3%. Corn down 2%, right? I mean, just look at WTI. Everybody wants to look at oil, down 1.2%. Don't be surprised at all if oil prices are lower, gas prices are lower this summer than they were last summer, and potentially 50 cents to $1.25 lower this summer coming than it was actually last summer. Don't be surprised. That's all I'll say about that, okay? It's not going to be as dramatic as you might hope, but still 50 cents to $1, maybe $1.25 a gallon is quite a difference, okay? Now, this is extremely important for everybody watching this video to see this right here, okay? This is a commodity index trust in general. And check this out. This is a 1 year on this baby. We are right about at 52-week lows now for the commodity index. Now, I can tell you, if we get more panic and fear in this market, this commodity index will push to new, fresh lows here. And, go back to actually potentially even multi-year lows if we get any sort of panic. I mean, at the end of the day, and this is one of the worst bearish theses I've ever heard. But I've watched so many people go on CNBC and other places. They talk down the market. They talk the bearish case, right? Perfectly fine. But then what do they go on to proceed to do? They talk about how they're long commodities and they're in all these different commodity plays. And I'm like, dude, like literally just open a stock market history book for a moment. And you will see, if you're bearish on the market, don't be in commodities. It's not the place to be, okay? Look at every one of those past situations where we got a devastated economy. You can't think that, the economy is going to be hurt severely and we're going to have some sort of mid to high recession and be bullish on commodities. It doesn't work like that. All those babies in that scenario will be down. Copper, oil, natural gas, all that stuff, okay? That's just the way it is. That's the way it is, okay? It is what it is, okay? And so at the end of the day, like, it cracks me up, some of these bears, like, go on to play these commodity plays. I'm like, what are y'all doing? That doesn't even make sense. Like, literally, okay? Travel stocks got hit heavily today. This is my travel watch list here. Hawaiian Airlines, 6.4%. What this basically shows me here today, this is recession fears, okay? This is, oh my gosh, maybe jobs numbers come in hot, CPI comes in hot, other things happen here, and therefore, the Fed keeps running here and recession gets more realistic, right? That's all I see when I see travel stocks down like this, because at the end of the day, you're even looking at fuel prices potentially being down, obviously, if the market gets weaker. But if everybody's scared about a recession, then people are going to say there's going to be less flights to Hawaii. There's going to be less people going on cruises, right? It might be less people needing Ubers. Less people coming to Vegas. Like, that's the view of that, nonetheless. And so it is what it is, right? Now, also, if we look at housing stocks here today, definitely shows you kind of on that recessionary theme. Look at R8 down here, getting pretty close to multi-year lows now at this point in time. It's not quite there, but it's getting pretty darn close, right? Zillow stock got hit heavily today, 6%. Any rally in housing is just like, in my opinion, it's a false rally. The home builders, I'm telling you, with these home builders, man, their backlogs are drying up, okay? They're drying up rapidly. They've got this quarter, next quarter, and maybe one more quarter of backlog, and then their backlog's almost done. And so they're going to be very dependent. I'm telling you, this is critical. This next 6 months is critical for the home builders. If these home builders don't have big orders start to come in over this next 6 months, I'm telling you, their numbers are going to be trash in 2024 unless there's a big pickup over this next 6 months for home orders. If this next 6 months doesn't see a big pickup, I'm telling you, those home builder numbers are going to be down substantially next year in 2024, and even starting potentially in fourth quarter of this year, okay? So just wait on that whole situation to play out there. I think some of these home builders had optimistic commentary when they did their latest conference calls last month, but the issue is Now rates are starting to go up. Mortgage rates are starting to skyrocket again. I don't know if you guys have been keeping track of 15-year fixed, 30-year fixed. I mean, those numbers are starting to skyrocket. If we're talking about the market getting shakier again, if we're talking about real fears of recessions out there again, and fears about the economy, all that's going to bleed into housing in a massive way, and that could create a very weak spring selling season and summer selling season if that scenario was to play out. So that's why I'm not in any of these housing plays. I don't want any piece of them. Not yet. Okay, maybe the end of this year, maybe in 2024, talk to me, but not right now, okay? Now's not the time. This is where we start to have some major fear and panic and potential capitulation coming in the market, is when we start talking about these banks, okay? Now, on my banking watch list, I only have the big dog banks, like the biggest of the bigs. I need to add a lot of the regional banks to this, because there's a lot of fear starting to happen around regional banks, and I'll get into in just a moment. But even for the big dogs here today, look at this. Ally Bank down 6.5%. Bank of America down almost 6%. Wells Fargo down about 6%. SoFi, oh, that's just another day for SoFi. JP Morgan, this is my favorite bank stock, right? This is one I actually personally own. This is the only banking-related stock I own personally, right? And I own this in my dividends-only account, right? 5.25% down for JP Morgan here today. Citigroup down 4%. Deutsche Bank, I love saying Deutsche Bank, down over 3% here today. Check this out. Shares of tech-focused bank SVB Financial plunged more than 50%, actually more than 60% on Thursday after the company announced a plan to raise more than $2 billion in capital to help offset losses on bond sales. Trading in the stock was halted for volatility multiple times during the session, and that drop brought SVP's market cap below $8 billion on this one, okay? Now, this is creating a whole, panic fear in the market. And basically, this is bleeding into some of the regional banks. So now if you saw Silvergate situation, I'm sure you guys have seen that, right? But that's crypto related. So a lot of people are kind of like, it's crypto related. So, it is what it is, right? But this situation hits more of the stock market. This is more fears for stock market folks, for systemic risk. And the way a lot of folks are looking at this is they're really starting to be scared of the regional banks. And the reason is a lot of the regional banks don't have the seat belts on them and the airbags on them like the majors do, like the JP Morgans and the Bank of Americas. I don't want to say it's more Wild West when it comes to regional banks, but it's maybe a little more Wild West when it comes to the regional banks versus the biggest of the big dogs. And so a lot of people are very fearful, or starting to have fear, okay? The key word is starting to have fear about a systemic problem that could be coming in the regional banks. Now, these fears, are they warranted? Are they unwarranted? We'll have to see. It really depends on where the economy goes, right? But I can tell you, the shorts and the people that have been betting on volatility for the market, they're going to keep talking about this night and day right now. And the reason being is they want the market to go down, obviously. So they want to create some very scary things. And so people all of a sudden start hearing about this. Oh my gosh, regional banks, maybe systemic risk problems. What happens if these regional banks start going under? What problems could that create in the economy if all of a sudden these banks started going under and they stopped lending, and there was all this fear, and what would that cause to the consumer and the economy? And so that's what ends up happening, right? And so we'll see what plays out there, but nonetheless, there's starting to be fears around that. And because of something like this, it creates that fear dynamic. You need a catalyst. You can't just say, regional banks could be a problem because, just because. You need something. And so this just kind of gives a little something there, like, did you see what happened to SVP? Maybe that could hit another regional bank. Maybe that could even hit the big banks at some point in time, right? And so that's kind of the mindset that happens there, right? And you look, even crypto getting hit today. Crypto's actually been very stable over the past few months, which has been incredibly surprising. But, look at Ethereum here today, 7.5% down. Bitcoin, 6%. All the cryptos in general definitely got hit here today, right? And look at Chinese stocks. Oh my goodness. BABA now is down 23% just in the past month, right? All these Chinese stocks getting hit here today. If we're in risk off market, which obviously we are today, right? And have been over the past, several trading days, to be quite frank, if not the past month, no one wants a piece of any of those Chinese stocks. No way, no how. Look at the VIX. Oh my gosh. 17.5% move here today. Now, keep in mind, there's been a lot of people playing different options around the VIX, basically spiking here in the short term. It's very suspicious, okay? Very suspicious. And I mean a lot of big players. I'm not talking about small money, I'm talking big money. That have basically been making some bets that the VIX was going to suddenly start spiking like crazy in the month of March, right? And all of a sudden, look what we got here. VIX spiking like crazy, right? And who knows, maybe this is just a start. Maybe it's going to get a whole lot higher this month. And next thing you know, you're looking at a VIX over 30. It's a very interesting dynamic there, right? And you're having a lot of these fears put out there. And once again, we don't know if these are justified or unjustified. But when you start talking about potential regional banks going under, I'm sure you guys have heard about the whole option plays in relation to like 0-day option plays, right? And like, oh my gosh, could that cause the market to go down 10%, 15%, 20% in one day, right? When you compound all these things simultaneously together, it causes fear. It causes panic. It causes worry, right? It causes selling pressure. And so that's kind of what we got going on right now. And once again, it might be justified, it might be completely unjustified, but it doesn't really matter for the players that have the bets on the VIX going high, the short sells, the put options, right? Like at the end of the day, they just need that to happen. Like it doesn't matter if it's real, fake, if it's, they just need people to be fearful and kind of panic right now and be very, very scared. Let's just call it like that. Scared is the best way to put it here. Okay. Now, this is a problem for the stock market right here, okay? Biden budget would cut deficit by $1 trillion or $3 trillion over the next decade. But this right here, okay, Biden's budget would also raise more revenue by increasing taxes on oil and gas companies, hiking the corporate tax rate to 28% from 21%, okay? That's an issue. Now, do I think that could go through? Probably not, okay? Probably not. But I'm telling you, okay, this is a big issue for the stock market if this was to go through. Because here's the simplest way to put this. If this was to go through, you basically need to knock off 7 percentage points off the S&P 500, 7 percentage points off the Dow, and 7 percentage points off the NASDAQ and Russell as well. It's as simple as that, okay? Because basically this is 7 percentage points less of profits that companies are going to be able to keep, and 7 percentage points more that the government's going to get to keep in that sort of situation. I don't think that's going to go through, especially in a time period right now like we're going to go through, where maybe corporate profits are on the lower end. You're not going to hear a lot about record profits over this next year, right? A lot of companies are just going to be kind of doing their thing, right? You might have a few companies that post some better numbers late this year, but early in the year, it's not going to be super exciting when it comes to net income, right? And so in that sort of environment, it's a little tougher to push something like that through if we are in a scenario where you're hearing story after story after story about this company just hit another quarterly record of net income. That's not really what you're hearing. You're hearing a lot of companies doing layoffs right now. They're taking these one-time expenses. So I don't think that's going to go through, but if it does, I'm telling you that's a problem for the stock market, and we basically will have to go 7 percentage points lower on all the indexes if that was to happen, okay? Now, as of tomorrow, we're going to have the new jobs numbers, okay? Now, the worry is that this number is going to come in hot. Okay, economists surveyed by Dow Jones expect the economy to add 225,000 jobs in February, and that wages will have grown about 0.4%, right? But here's the issue. If either one of those comes in hot, let's say the jobs number comes in at, 275, 325, something like that. Let's say wage growth comes in at 0.6%, 0.7%, 0.8%, something crazy like that, right? Market's going to flip. Okay, market's going to freak out because they're going to say, oh my gosh, the Fed's going to have to do a lot more raising than we thought. 50 basis points will then be for sure in the bag for the next time. And then there's going to be thought process about, is 75 basis points on the table or multiple 50 basis point raises on the table? And whether that's true or not, like people are just going to start drawing conclusions out of fear, right? Because we know what we went through in the market in 2022. We know it just like it kept coming in worse and worse and worse, and like inflation stayed hot, stayed sticky, and we're like, oh my gosh, is this ever going to end, right? And next thing you know, we started getting 75 basis points, 75 basis points, 75 basis points. So people are very traumatized, and Wall Street's very traumatized. So I'm telling you, if this was to come in hot, that's just another lever of like panic that could come out there. If this comes in really cool, don't be surprised that the stock market, all the fear kind of goes away in a little bit in the short term. You could have more recessionary fear at that time, but at the end of the day, the market right now would rather have recessionary fear, which is very strange. It would rather have recessionary fear than inflation fear right now, okay? Actually, the best case scenario might be that it just comes straight in line, like somewhere between, let's say, 215 and 235. 215, 235, and right around 0.4% wage growth. I mean, that would be the ideal situation, because then you're like, okay, the economy is not overheating, but at the same time, it doesn't look like we got a recession going on. And so it puts maybe a soft landing on schedule or something like that. Okay. Next potential panic situation that we have out there, right, is Tuesday before the bell. Tuesday before the bell, we get the new CPI numbers. Okay. Now, obviously, if CPI comes in hot, the market's going to flip. Okay, the market's going to flip out. Everybody's going to freak out. Don't expect the indexes to be all down all 2, 3, 4% if CPI comes in hot. Okay, I think this is a kind of a tough month to gauge. I'll be honest. I'm having a little trouble gauging it myself. Okay, I'm very confident that March through November we're going to come in with very, very low numbers, and it's going to look excellent. Numbers are going to look excellent from March, but I think February is a wild card. So could we get some sort of higher number than expected February? It's definitely a possibility. I think it's a wild card. If you were to get that, market's going to flip out, obviously. Everybody's going to freak out. They're going to sell their stocks in mass, and next thing you know, there's going to be steal deals all over this market, right? If we have CPI come in much lower than expected, we'll start to have a sustained rally. Now, I can tell you, if we come in much, much lower than expected, don't be surprised if that's the start of a new bull market if we come way under that, okay? Because I can tell you March through November is almost in the bag as far as numbers coming in my opinion, very, very low. And you'll start to even see some 4s within the next 3 months. You'll see something with CPI 4 in front of it within the next 3 months. Then it's coming 3s, okay? So those are on deck. But the problem is between this and that, you got this 1 month here that we don't know what to expect here. So that's another one of those potential panic capitulation type events, because I'm telling you, if you got another hot CPI coming in here after we got last month's hot inflation numbers in CPI, that's what everybody starts drawing to conclusions. Oh my gosh, we're screwed. Inflation's just going to continue to be super high. It's going to be super bad. And the Fed's going to have to raise extremely aggressively, which would cause the Fed obviously to come out extremely hawkish next time they come out to speak. And, oh boy, okay, that would be a whole situation in itself, which then you're talking about VIX 27, VIX 33, something like that, in that sort of scenario there, okay? Now, to leave you off with some good news, Ulta reported some incredible numbers here. Ulta Beauty, 668 versus 568 was expected as far as the EPS. Absolutely incredible number. Stock's down after hours. I think that's probably just because the whole market's down. But it goes to show you, I mean, companies are going to execute. Companies are going to execute regardless of what's going on for those fears out there and everything like that. It's just, it is what it is, okay? But get your money ready. Get your wallets ready. Get your pocketbooks ready, because, there could be some great, there's already a lot of great buying opportunities in the market, but there's a potential of everybody freaking out over this next few weeks if a few of those scenarios play out like we just went through in this video. And as a long-term investor, give me the deals. Like, I'll take them. I got $100,000 ready for the next few weeks if we get a major sell-off in the indexes. If we get a major sell-off, I got $100,000 ready. Get your money ready, okay? Hope you guys enjoyed today's video. As always, make sure you join us in the Patreon. That will be pinned comment down there. That is, it's like $10 a month. It's a no-brainer to be part of that. It's like $2.50 a week, and you see all the moves I'm making, exactly how I build up a portfolio. It's through my GVD 1, 2, 3 strategy. It's a beautiful thing. Appreciate y'all, and have a great day.